all. How are we all doing? Good morning, Christian, Kennelly, Steve, Danny, Umo, Gregors, Baggy, Rico, Senji, John, Peter, Amy, and Joe. That's quite a short list this morning, isn't it? 33 people. Where is everybody? It's Friday. No one's getting up, are they? But anyway, let's see if we can get 33 thumbs out of it. How are we all doing? You have to wonder how many bots are in here. Do you reckon there's bots on YouTube watching videos for some reason? Why would bots watch videos? They never seem to hit the thumbs up, do they? Don't know. Morning, Sarah. Morning, Virginia. Right. So let's start off with the news as usual. Hoping this euro US dollar is going to get out of this V shape today and come and have a crack at that high. We got Canadian rates. Oh, stop advertising Epic Pen to me over and over again every time I open the bloody thing. Sorry. Oh my God, which account am I on? That one. So yeah, hoping that the Canadian dollar will push the US today down and we can get that retest done. But 5 days now, stuck. But anyway, we'll see. So news today. We had Bullock speaking overnight. We had obviously the unemployment, which did nothing yesterday on the US. So the only news we've got coming out today is the unemployment rate for Canada, which is at 1:30, an hour before market open. So we'll see what happens there. They are forecasting, as everybody has, to be fair, they're forecasting their unemployment rate to go up. So New Zealand forecasted their rate to go up. Ever so slightly went up. US forecast the same. We got, as expected, we got a previous level, so it didn't go up. We're forecasting a slight increase for the Canadian unemployment. So we might get 5.8 on that. But we'll see. Canadian unemployment is ridiculously high compared to the rest of the world. Where's my fundamentals gone? That's the wrong one. So yeah, they're a lot higher. If you look at the unemployment rates worldwide, Canada is up at 5.8. The only higher is the Eurozone, but you know they've always struggled with unemployment. It's cold. There's a lot of bears around. There's not a lot of jobs unless you're into logging. Anyway, I don't know. I have no idea what they do in Canada. They produce a lot of oil. I know that. Morning, Franco, Pemba, Max, Evil. So that's what we got coming up today. If we skim through the news overnight, we've just had CPI, German final CPI figures, 2.9 as forecast. We knew that was coming out as forecast. Haskell's been speaking. Lower inflation signs encouraging, but insufficient. When was that? 5 o'clock this morning? What are you doing up at 5 o'clock in the morning? Seeing if there's anything coming out of Japan that might be of interest after what they said yesterday, but not. Bullock, possible rate cut if consumption slows faster than anticipated, all to do with inflation as usual. So that's it, really. Nothing much else overnight going on apart from Biden, obviously, going senile, which we kind of knew. Pinterest shares were out. They dropped. Cloudflare has jumped. What else have we had? Nothing much else overnight. So that's it. So nothing exciting overnight to worry about. So 1:30 today is our first news. Indices yesterday for the US yesterday afternoon were tricky. NASDAQ hedged. Couldn't get out the NAS. Basically pushed up 2R. Didn't even get to 2R. Pushed up just under 2R. Sat there for hours and then popped down a little bit and came back up and just went into a symmetrical triangle break, which didn't break. So it didn't do anything. Couldn't get out of it yesterday. The only exit you had was less than 2R if you were brave enough to jump out of that. So the NAS got totally stuck yesterday. Horrible inside day. Well, not inside day, but I mean just a terrible sideways rotation. So this is a textbook rotation. Look, open, Globex, back to where we started. That's a textbook rotation day. The market has no interest in driving the market in any direction, so we just make some moves and make some money and don't go anywhere. Dow was a hedge. So hedged, down, hit target, aggressive exit, out. That was a nice and easy one yesterday. Again, could have got loads out of it, more, but I'm after getting out with a bit of profit, not a massive. And the S&P, no trade because the range was too tight at the open. And as you can see, good job. I haven't looked at anybody's, I don't follow anybody's results or anything, but I can guarantee you yesterday there was blood everywhere in Discord and Telegram groups all over the place. Or it was totally silent because nobody could boast about making any money out of their massive, amazing trades they took with their super systems because they all got killed. So yeah, awful trading conditions yesterday. Nothing you can do. So let's look at the US market, UK markets. Nice exit on the DAX yesterday and a clean exit on the hedge. So yeah, so both hedges yesterday, weren't they? Got out of both with profit. So UK selling off very heavy towards the open, straight into yesterday's low. Look. So we're literally just tapping into yesterday's low. We've got 30 seconds to the open. So if we, the pre-market range today is probably going to be sort of something like that. If it breaks south, we may well run straight into a bucket load of limit orders sitting at yesterday's low because it was a big sell-off day yesterday. DAX did the opposite yesterday. Didn't do an awful lot of movement, but we had a much bigger rally on the DAX, whereas yesterday we had a much bigger drop on the FTSE. So both out of sync with each other. No trades on pre-market ranges. Pre-market range too small today. I'm on both. So no pre-markets taken. So I'll be taking the 5-minute opening ranges today. Just shy, look, 72 out of 73. 73 is 10% of ADR. It's 72. So it may only be 1 pip, but EAs are EAs, and it is 1 pip too shy. So we do not trade it. So if you are taking the 15-minute pre on the ORB or the 5-minute pre on the ORB, well done. You've got 1 hour out of the 15, and you've probably got 2 hours out of the 5-minute pre. If you are trading ORB on the DAX, you've just triggered long. That's going to put in a big candle. I'm not sure I'm going to get on that. 137, 146 is max range, which is 20% of ADR. So this may not get an entry today. It's at the moment. So we'll come back to that in a minute and see where we go. We'll have a look at FX while we're waiting for 5-minute ranges to go in. Morning, Evil. Can't remember if I said morning. Max. Can't remember if I said morning. Alan Bay. Can't remember if I said morning. Morning, Pot DJ. Morning, Day Trader. Right. So FX wise, we'll go and have a look at ADRs and things. So ADRs today, we've had a few already, and we've got some weekly ranges here. We are on Friday, but we'll have a look at those weeklies as well, just to see if there's any opportunities for mean reversion on them. First of all, let me just see if there's anything to bank. Euro US dollar. Oh, that's what I'm looking at here. No, I'm not. I'm still holding that. I'm going to hold this. Just think we're going to get there. It's trying really hard. Since we put this double bottom in and rejected and put the reversal alert in there, we broke the high, came back, retested the high, pushed up, made a new high. Then we pulled back, retested the reversal, and pushed back up in a V-shaped recovery. So yesterday's move south by the sellers failed. So I'm hoping today the buyers take a break. And if they get that high, there's nothing to stop us until we get to retest the propulsion move from FOMC. So unemployment rate, FOMC, unemployment, whatever that was. So yeah, unemployment rate, wasn't it? I've got a feeling that we might get that today, especially if the Canadian numbers come out as expected, i.e. unemployment going up. That will drop the CAD CAD will push down the US, and obviously Euro US will pop. So I'm going to hold on to that. There's nothing else to bank. So ADRs today, Aussie New Zealand. I'm having a good fight at the moment with somebody on comments on the ADR strategy. They're convinced I'm calculating ADR wrong, and that if I switch my time frame, ADR will change. I've tried to explain it, but basically, so yeah, it's quite amusing. I will delete the comments soon because basically I've just said to him, "Go away, you're useless. You're never going to make it in trading. Off you go, mate. You're thick." I like to do that to people every now and again because it really winds them up. Then I block them from the channel and they can't respond. My vindictive side. I can't bother to argue with people. Aussie New Zealand ADR. So in that one, look, 125 ADR. So entry taken this morning, 5-minute reversal alert in. I'm not normally that vindictive. I just can't be bothered to spoon feed people who can't be asked to watch. Anyway, 5-minute reversal alert has gone in. We have pushed up, we've retested, and looking for a pop. So this is the obvious level. Yesterday's low, which we opened at, and then we slammed through today. So your target to the upside, if you want, is either yesterday's low. For me, that's enough. So retest of that propulsion gap, which means we've got to push up 1 ADR away from the 125 ADR. So ADR, I don't know if you're in here, whoever's arguing with me on Facebook, on YouTube comments, but average daily range is calculated from the high of the day down and the low of the day up. So this line here has moved down because from that low to that line is a calculation of average daily range, which is 43 pips. So what you do, just explaining it really simply, because I did it in the video, I might have gone a bit fast. But what you do is you click on the crosshair, you go to the low, you measure up, and you'll find that that will be 43 pips away on the hourly chart. But on the daily chart, it's 43 pips away. On the 15-minute chart, it's 43 pips away. It is calculated from daily. I was right all along. Sorry. Just in case he's in here. I'm waiting for the comment to come in, but it's not coming. Because I said I'd explain it in the live room. So yeah, looking for a target up there on the Aussie New Zealand. Sorry, it's Friday. I'm in sarcastic mode. Let's just quickly check the indices. It's 5 past. So the initial cash balance is in. 5-minute ORB is there. So taking a break of the 5-minute ORB on both. So we'll see where we go from there. If we do break south today on the FTSE, this yesterday did break out of this range low, the weekly low that we were looking for, and pulled back. So today, the fact that it's come down, it's either going to double bottom this and not make it, or if it does break that, we're probably going to get a little bit of a flush today. So if we can get out of this pre-market low and yesterday's low, this might drop nice and fast today. The trouble is I'm going to get triggered into a trade as we are testing that level. So this might be a tricky one today. We'll see. But if it bounces from there, we should also get a nice bounce up. So that's Aussie New Zealand. That is also a weekly extension, a weekly range extension, which is measured from the high of the week and the low of the week, up or down. So sarcastic voice. There's your weekly high, and that is 146 pips on average. That's what it moves. Yeah. Anyway. So it's pushed down, nice weekly reversal as well. It's also extended on RSI. So it's an RSI entry, it's an ADR entry, it's a weekly entry. It's a bloody good opportunity to go long. That's basically all you need to know. We got a weekly on the pound Swiss. I think that one's been there a week, isn't it? Yeah, so that one hit on Wednesday and pulled back. I've got positions on that one already short on the ADR reversal. And it just doesn't seem to be stopping. This Swiss franc and this pound are not playing ball very much at the moment. I've just stopped out on my aggressive drawdown control position on the pound. Okay, so I'm out of that aggressive drawdown control position. Because it ain't stopping. Anyway, we'll come back to that one in a minute. Pound New Zealand. So that's literally just tapped into ADR and pulled out. 5-minute reversal alert has just gone in there. So long opportunity. That's obviously the closest area, which is that low, which could retest and drop. Failing that, we'll probably come and test that propulsion out of that accumulation breakdown today. See if we can put another leg in from there. New Zealand dollar CAD is also a hit today. Up into the highs. So nice reversal down into there. Big strong move on that New Zealand. Interesting. Just a big rally on the New Zealand dollar. New Zealand dollar Swiss. That one's hit 125. So I'll be getting in short on that one in a second. So I'll be taking that reversal alert short New Zealand dollar Swiss. That's also extended 150 of its weekly range. But again, we looked at this one. This is where we opened. Where are we? Thursday, Wednesday, Tuesday, Monday. Yeah. So this is where we opened. That's where we closed on Friday. So this is around about half an ADR of movement, which is kind of a broker candle. So it is still whacking great extension though. So all we've literally got is a 2-day rally flag break. So it's going to be coming down to retest quite deep on this one at some point. So that's a nice opportunity to get in as well. That is also just about getting into an extension again. So you've got divergence on the RSI there. So RSI is flat. Price is making new highs. Bearish divergence. New Zealand dollar yen. Extended on everything. So it's a 3-day rally we're in at the moment. This yen is getting hammered. Just so annoying. But it is getting hammered. So we're up at ADR. We're about to hit 125 on this one as well. We're not far off. A couple of pips. I wonder why they're devaluing the yen so much at the moment. Anyway. So, yeah, there's your ADRs. We'll come back and look at the rest in a sec. Let's just see if we've got any breaks. So just tagged in long on the DAX. Just tagged in long on the DAX. We're inside. We're not inside bar. It's almost an inside bar on the FTSE. So no direction, no momentum on the FTSE so far today. DAX has just rejected the pre-market high. So we'll see if this initial rally holds up and if we've got any speculative traders in there. So upside targets and downside targets today for these two. If you do get hedged or you do want to hold for a longer run. 2R today on the DAX is going to be just shy of yesterday's high, which is fine. And then obviously high of the week, which is Wednesday's high for a 5-hour run. Downside 2R is within the previous day's low, and obviously yesterday's low is down there. So that is we've got loads of lows because obviously we're just making new higher lows ever so slightly at the moment. So I'm just going to move 5R up inside yesterday's low. Obviously, if we get hedged, I mean, if to get down there, I'm going to need to be hedged anyway, and that's what I would target to the downside. But this area here is a good support as well. Look, so we've hit that on Wednesday, bounced away. We came back down. We tried to push through that level and rejected, pushed away, came back down, retested that level. Bulls came back in again. So this is a strong buy area here. So that is possibly an area that we might get a reaction if it decides to drop today. So I will watch price action around this area as well today if we get down there. But that's the obvious spot to target initially because there's going to be limit orders at yesterday's low. So we'll see where we go there. So yeah, stopped out unfortunately on that one. There's loads of RSI extensions to look at today as well. Let me just catch up on chat. OMC was that, yeah. Morning, JC. Swiss yen on monthly RSI extreme, yeah. Monthly RSI. I don't look at monthly charts. Way too long term. For me, anyway. FOMC was it? Yeah, I can never remember what news. It doesn't matter what the news is, it's a spike. But the FOM, every news at the moment, if it's a spike, is a relevant news spike because we're all focused on interest rates. So if they haven't changed an interest rate, I'm not interested. A minute. McDonald's wouldn't hire me. Ah, Franco. That's saying something. If you're too thick for McDonald's, you got real problems. Joke, by the way. I wonder if you do need qualifications to get into McDonald's. Never actually looked into it. I didn't, but then that was like a long time ago. Ronald McDonald was still around when I was there. Morning, Chucks. Morning, Pinecone. MT4 Indie Calculator ADR. Okay. Not sure what that means. New Zealand dollar Swiss. We've looked at that, haven't we? Just now on ADR. Yeah, just looked at that. Friday mode is revving up. I don't know what. I just get like this towards the end of the week. It's like, God's sake. I get it all week. This is the problem. You don't know what I go through in Telegram. The type of people I have to talk to in Telegram to try and help. And it just drives me, it grinds you down. There's certain people you just can't help. It's just you can't help. And it wears you down. And Friday, obviously, I've had a whole week of it. Then the weekend I reset. Monday I come back. Hey, everybody, how's it going? And then Friday it's like, for Christ's sake, why are you so stupid? Not you, but I have to say, probably half the population. I was watching a program yesterday. I will do this in a minute. About, it's called the £1,000 Sisters or something. I can't remember what it's called, but it follows two morbidly obese women who are going through a weight loss journey in America. £1,000 Sisters, I think it's called. And it just fascinates me. And my wife is fascinated by first of all, how they got there. And secondly, how the hell are they going to get out of this? But we were watching them do stuff, and they went to the gym yesterday, right, to do a workout, and they put black bin liners on. Yeah. And you have to think to yourself, and they're from deep south as well. So, you know, not the brightest sparks, some of them. But you just have to think there should be a law in place that, first of all, you either need a qualification or a level of income to be eligible to vote. Because these people who, honestly, if you had a thick meter that went from 1 to 100, they'd definitely be around about a 98. Yeah. But these people have an opportunity to vote in who runs a country. And you just have to look at them sometimes and think, you probably want to be a trader as well, don't you? And I was sitting there last night thinking, I bet she'd love to figure out what ADR stands for. Anyway, I want to find a tangent. I think people get confused between ADR and ATR. Yeah, possibly. But the video explains in intricate detail what it is. And he's commenting on a video, which he obviously hasn't watched, because if he'd watched the video, he'd know what it is. I don't know. Anyway, I wonder what makes a Swiss franc weak this week. It's not massively weak. It's not massively strong. It's just going through a correction at the moment. The Swiss franc is a safe haven currency. So money gets pushed into and pulled out of the Swissy based on fear and greed. So when there is enhanced conflict in the world, the Swiss franc rallies. When there's a financial problem in the world, the Swiss franc rallies. The Swiss franc is where you put your money when you want to be safe. They have everything running like clockwork. Yeah, their interest rates are always the lowest, which means you don't get a great return, but you are also not in any danger. Their inflation is pretty much, spot on where it should be, or under where it should be in this case, because they get it right. Their GDP just continues to grow gradually. Their unemployment is very, very low. Everybody's got jobs. Everybody's rich. Their banking system runs like clockwork. Everything works perfectly in Switzerland. So if there is any kind of worry about what's going to happen to anything anywhere else in the world, why are you on the TDI dashboard? You pull your money out of that currency or commodity or stock or whatever, and you put it in the Swiss franc for safekeeping because it's safe. The same with the yen. The interest rate is terrible. You're going to start to lose a little bit of money all the time. But again, they are pretty damn good with most of their GDP at the moment is awful, but unemployment. I mean, again, the Japanese are good at what they do when they do it, but they have a lot of overseas investment rather than keeping money in their currency. So you use the yen and you use the Swiss franc for safe havens, which means that when we are in a time of greed, we pull the money out of the Swiss franc and out of the yen and we put it into the more volatile, dangerous places, which will give you a higher return, like the New Zealand dollar, the US dollar, 5.5%. So it's basically just runs on the Swissy, and you'll find the Swissy will have big, strong runs in one direction, then big, strong runs in the other direction. Then it sits around because nobody's interested. And then it will fly off in one direction or the other. It's also driven by the euro. Euro and Switzerland, obviously, same area. So they're big trade partners. A lot of the euro money goes through the Swiss banking system. So you tend to get a lot of movement. Same as you do with the US dollar and the Canadian dollar, you get with the euro and the Swiss franc, you get with the Aussie dollar and the New Zealand dollar. They move quite a lot in sync. Why it's moved? Just volume of money coming out of it. There's no news this week that is any specifically good or bad that would drive it from a fundamental perspective. Did Aussie New Zealand trigger H1M5? Yes. There. So there's your 5-minute reversal. It's coming down hard at the moment, though. New Zealand dollar's rallying like a lunatic at the moment. But yeah, it's an H1 RSI extension, so first entry long on that. You got 28 pairs open in MT4 with the EA, yep. Pound New Zealand. Quick look at that one. Dropping at the moment. New Zealand dollar's going crazy. There's no entry on this at the minute for me. Coming down, we've just broken out the range lows. So I suspect we'll come back and retest this high here, which is the high that was broken by that propulsion move and retested and added to. So this area is buyers. So 150 ADR today. Well, yeah, doubt it's going to get 150 ADR today, but obviously over a period of time, that's the area I'd look to target. If we can drop down to there very quickly, we'll get an RSI extension and I'll go long. Michael, hey Franco, why do you run a Telegram session? Why do I run a Telegram session? I mean, Telegram group, you mean, just for support? Just for support with the indicators, the EAs, the strategies, and to try and help people. But it's mainly for support. Yeah, people need to ask questions about indicators, EAs, strategy, that sort of stuff. That's all. But you tend to get a lot of advertising in there and a lot of idiots, unfortunately, looking for the Holy Grail. And then I say, send them here, come and have a look at me and doing it, everything live, and then they don't bother turning up. So can't help you. Sorry. £1,000 Sisters is brilliant. Yeah, it is so good. It's so fun. I've got a weird obsession, not in that way, but a weird obsession with clinically obese people. I find it fascinating. How did you get there? And when they lose all the weight and they have all the massive bits that need to be cut off, it's like cutting my entire body off of their arm. I just find it fascinating. I don't know why. Same as ATM. Yep. ADR, ATR, ATM, all the same stuff. Is the Swiss weakening at the moment? Is the Swiss weakening at the moment, in your opinion? Yes. You can see that. You don't need my opinion to know that, Patrick. this is going up against the Swiss franc. So yes, if you want to know if a currency is, which currency, so when you see a move on a chart, any chart, like CAD Swiss, for example, if you want to know why it's moving, as in, is it the Canadian dollar is strong or is it the Swiss franc is weak? If you look at that pair and go, right, that's going up. So it's either Canadian dollar strength or Swiss weakness. Yeah. So if you then just go to all the other Swiss franc pairs, if they're all going up as well, it means that the Swiss franc is weak. Euro Swiss going up, Swiss franc is weak. Pound Swiss going up, Swiss franc is weak. New Zealand Swiss going up, Swiss franc is weak. That confirms the Swiss franc is weak. If we looked at all the Swiss franc pairs and they were going sideways or down, that tells you that the Canadian dollar is strong. So what you could then do is look at all of the Canadian pairs. Aussie CAD is coming down, Canadian dollar is strong. CAD yen going up, Canadian dollar is strong. Euro CAD not moving. Either that means that the euro is as strong as the Canadian dollar, which means you get a sideways move, or not. So that's how you tell, just by flicking through the pairs. Or you can use these useless currency strength charts, which will just tell you that the New Zealand dollar is strong. So you could use that. If you just want to know instantly, I wonder why that's moving. The New Zealand dollar's rallying. That's what that's useful for. But you can see that on a chart because the candlesticks will have gone up. Or rather, everything will have gone down against the New Zealand dollar. Yeah. So the best trade out there at the moment is New Zealand dollar Swiss. Because the New Zealand dollar is strong, the Swiss franc is weak. Therefore, the New Zealand dollar Swiss will have had the largest move at the moment. So if you're looking for a mean reversion opportunity, you pick the strongest currency against the weakest currency, because at some point that rally will finish and that dump will pump. Therefore, at some point, the New Zealand dollar Swiss will reverse direction very, very quickly. But you could also use an indicator like the relative strength indicator, which is why I use it, to tell you the same thing. Wow, New Zealand dollar is really strong against the Swiss franc. Therefore, it's probably going to pull back at some point. Every indicator out there tells you pretty much the same thing in a slightly different way. 95 watching, 45 likes. Sorry, I'm in a real childish mood today. I can't even say childish. We'll look at those in a sec. Just want to see what's going on with the indices. Absolutely nothing. Oh my God, this is the third time this week. It hasn't done anything. Like pulling teeth at the moment. It really is. Not if you're in the UK because you can't get a dentist. But anyway. Right. Do you have a Japan 225 long position? No, because I don't trade Japan 225. Telegram, but doesn't YouTube provide that as well? No, Telegram channels are like Discord channels. YouTube has a chat system for live streams and a comment system for videos, yeah. But the Telegram group is for support on everything. Can you please review the possible return locations for the New Zealand dollar Swiss? As I'm on it. If you've got support resistance propulsion indicator, you can see them. Eventually, but same thing as when what it's doing now, basically. So what it's doing now is filling all these propulsion gaps that were left in place from these previous moves. So when it comes back down, it's going to fill all these propulsion gaps. So if you're in short, I'm not in this yet. I will be in it shortly, though. I'm on 5-minute RSI. I was saying, what? So yeah, when this candle closes, we're going to get an RSI extension. So I'll be taking the 5-minute reversal after the RSI is extended. So the target, ideally on the hourly chart, I would go for the ADR move to the downside. But you could target that. It depends what you want to target. You know, if you're getting in and out on a quick 125 ADR RSI extension, 5-minute reversal at scalp, That's your target. If you want to hold it a bit longer down there, the Swiss franc will rally back up again. This New Zealand dollar is really pumping off the back of this unemployment rate. Yeah, so this was really good news. We didn't get the reaction on the day. We did get a little bit of New Zealand dollar strength on Tuesday rather, when that came out. It was kind of Tuesday evening, Wednesday morning. But we didn't get any continuation. What we're seeing here is the continuation of that move. So this is basically, wow, that's really good. Unemployment's coming down. What does that mean for the New Zealand dollar? They can drop their interest rates faster because unemployment is a byproduct of high interest rates. So if your unemployment is coming down, it means you can take the pressure off of this, as long as that is coming down. Yeah, this is the Australian dollar, but New Zealand dollar is pretty much the same. Yeah, so it means that they can drop this quicker, which you would normally find is the opposite, New Zealand dollar dropping. So the market at the moment is just rallying off the back of that news. It doesn't mean anything. It will probably come all the way back down again because at some point they're going to drop that interest rate, which is going to weaken it. So, but yeah, just go for propulsion targets, or, you know, pick half an ADR, 3/4 an ADR of movement. What's your DD policy? Don't really have one. I get out when I get out. When something's looking bad, like the US dollar yen, I'll just start doing drawdown when things get too heavy, basically. When you're uncomfortable. At the moment, I'm not uncomfortable. I'm in 10% of drawdown on the entire portfolio. There's only 2 positions in there that are in uncomfortable drawdown, and they make up 7.5% of that. Nothing I can do about it. I will cut it at some point if it gets too far. I've got an aggressive drawdown control position on this at the moment. So if we get a negative unemployment move on the Canadian dollar, i.e. if unemployment goes up to down the Canadian dollar, this US could come down to ADR today. I'm out. So I'm not doing anything with this while there's pending news. If it pushes up and takes that aggressive out, I'm going to make a loss on that. And then I'll have another go at an aggressive later. But I can't do any drawdown control on this account because I haven't got any profit. So these yens are just killing me at the minute. So nothing I can do. It's only the 8th, 9th of the month though. So the other accounts are not having a problem. New Zealand dollar yen 125. So I'll be taking a short on New Zealand dollar yen. We're almost at 150 ADR. This yen is getting absolutely killed this morning. And that obviously New Zealand dollar's rallying. Market really coming out of this. The other thing you've got to bear in mind as well with this yen. So let me just quickly. God, look at it. It's still not moving. The other thing you've got to bear in mind with this yen is we are approaching that magic 150, the intervention level. Yeah, this is where the Japanese go, oi, stop it. And the market either reacts or the Japanese put an intervention move in by liquidating overseas assets and buying the yen. So this comes down fast. Yeah. So I'm not particularly, although I'm in squeezes on them at the minute, I'm not overly worried about it because look at how long this has been going on for. Yeah. And look what happens when we get to 150. Always when we get to 150. Intervention. Intervention. Drop. 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 Intervention. Intervention. It's not economical for the yen to go above 150 because it just makes unfavorable trading conditions with US. US is their biggest trading partner. It's not economical for the US or the yen to trade above that level because they can't make any money. They can't make any money. The Japanese will turn around and go, sorry, there's no point in us supplying you. And the US will go, but we need phones. And they'll go, all right, well, let's do a deal on the yen. Yeah. What we'll do is we'll pull all the money out of your bonds and we'll buy the yen with it. Is that all right? Well, no, we don't want you to do that. Right. Well, then you buy some yen or we will pull the money out of your bonds and we will buy the yen. Either way, that is coming. or that is coming. Because if it doesn't, the economy of Japan and the US implodes. So it's going to happen. So that's why I'm not overly concerned, because we're getting to critical mass. However, if it does scream up and try and put a double top in up at 155, I will have to scale out of some of this because it will be getting a little bit too big. But we've got news coming. So I'm probably going to stop out this one today. So most of this month's profit is going to be munched today by the end. But what can you do? DAX has just put in a new high of the session and pulled back from it. It's comedy. It's literally like a comedy at the moment. The indices, isn't it? It's just like, pull your hair out. The CEO of the 5%ers revealed that he trades negative risk reward, and people just wouldn't accept it. Nothing wrong with trading negative risk reward. That's why the CEO of the Fivers is probably a profitable trader, because there is nobody on the planet that ever said that you had to have a positive risk reward to make money. I don't. My risk reward ratio is very negative. I go into 3% drawdown to make 0.25%, but I make 100% plus a year, because no reason that you have to have a 1.25 to 1 risk reward ratio to make money in this market. That's ridiculous. Good for him. But I'm pretty sure he doesn't want his people to do it, because the people that are going for the positive R's are all the ones that are going to blow their accounts through stop losses all the time. So I'm pretty sure he's probably kept that under his hat for a while, because that's how you make money. I paused trading indices for Q1. Get slaughtered in these conditions. Focused on the market reversal alerts. H1M5 and hedging for now, yeah. This is why this is my bread and butter. Yeah, any stop loss strategy, or any strategy that uses any kind of hedging mechanism to stop loss, which is basically the same thing, isn't it? You will struggle when the market conditions are wrong, and they're wrong at the moment. I'm still up saying that. I'm still up like $850 this month. So it's not a down month when we're only on the 9th, but it's been a struggle. December was a massive struggle. January was a massive struggle. February's a massive struggle. But like we said yesterday, we looked at it. You know, this is just a stagnation period. It's hard to make money in stagnation. You need the market alive, and you know, this is absolutely prime example of the market has absolutely no interest at the moment in buying or selling anything, is it? It goes through. It's the US session at the moment, which is the big one. It seems to be. And you get the odd day. But look at the direction. You get a lot of movement, but the movement is non-directional. Yeah, we haven't gone anywhere. I mean, that as well. I mean, yes, it's a tiny move up, but it's not. We're not trending like we used to. It's just not doing it at the moment. Something's broken. I think the world is just, you know, the minute everybody is just super cautious. There's so many flashpoints going on around the world at the moment, which could mean you do not want to be investing in the stock market. I don't think anybody's interested in really long-term investment. And that is what tends to start trends off. We're not got it, have we? So it'll change. So your EA is still removing 33%? No, I do it manually. It's all manual. Look. Yeah. Manual targeting, no auto DD control. All accounts, same thing. Can you share how to remove bid-ask columns on the Market Watch? You can't. They're still there. Can't remove them. You can, however, adjust the width of them. So just adjust the width of that first column. Hide them away. And, which I suspect is your problem, you can't adjust the width of the column because you have, if you right click, auto arrange turned on, which does that. So turn off auto arrange, right click, just a column, hide it away. It's magic, that. Not a lot of people know that. More of a tragedy than a comedy. Except for the US indices. No, the US indices are exactly the same. Look at yesterday. Yeah? Look at yesterday on the NASDAQ. Absolute chop death at the open. Look at the S&P. Absolute chop death at the open. They're all doing the same at the minute. It's completely erratic. It's either or it's there is no in between. There's no normal. We're just not getting normal market structure, normal price action. It's just not doing it today. Or at the moment, it's just look at it. Yeah, this is the open of the European indices, the largest volume of orders of the day in the market, the largest volume. The initial cash balance, where the entire night's orders are processed in one go. It's just not happening, is it? We haven't even broken out. We are inside bars on the initial cash balance on the FTSE. There's just no volume. It's just... You have to laugh, otherwise you cry. Is this more what the indices are like before the COVID stock market rally? I wasn't trading indices back then. I only got back into indices in the last sort of year, 18 months. So I didn't trade them over COVID. I traded them years and years and years ago when I was trading stocks. I've literally only just got back into them in the last year or so. So I didn't trade over COVID, not on indices, only FX. Does a breaker top block MRA disappear if the market moves the other direction? And if so, does this appear on the time frame that the signal appeared? The market reversal alerts indicator you're talking about, yeah? It draws market structure, yeah. So if when you get a reversal in structure, it draws the reversal. If there's a new high made, that reversal in structure is invalid, so it will draw the new support rectangle for the next break. Yeah. Otherwise, you'd just have orange blocks everywhere on your chart. You wouldn't make no sense with it. This draws current market structure. Current market structure is long. If there's a break to the south, it will draw the break. If that break's invalid, it will remove that because it's not valid. It's not a break anymore. It was a failed break. Same way as if you had a breakout indicator. When the market broke out, it would then look for the next break. It would remove that. If it didn't, you'd just have thousands of lines all over your chart. It'd be pointless. There's no point in having it. Again, the people that know nothing about trading call this a repainting indicator. I call it a market structure indicator because it shows me what the market structure is. It's a historical indicator showing me the past. It's not repainting to fool you into thinking that there was a trade and it didn't work out, so we'll hide it so that nobody sees it because it doesn't work. It's drawing the new structure in because I need to know when the market is going to now be on my side and break to my direction. Two ways of looking at it, isn't there? He's a con man trying to scam me, or he knows what he's talking about with market structure and he's built an indicator to clearly show what's going on. Education or no education. I'm not saying that you're like that way, and I'm just saying there are a lot of people like that who think that there is a holy grail indicator that will just tell them what to do, which there isn't. But yeah, it draws in current structure. How can I learn the H1 hedging strategy? Didn't find a video about it. There isn't a video about it. Literally, you take every single reversal alert. So every time there's a reversal alert, you take it. That's it. There is nothing more complex. When it reverses, you enter, you get out. When it reverses, you enter, you get out. When it reverses and it doesn't get you out, or you don't get out, and it goes the other way and gives you another reversal, you get hedged. And then you wait for one of those to go. And as that one hits that target, this one goes into drawdown, takes another reversal, and takes a second entry and position trades. It's exactly the same as H1M5 or it's exactly the same as this strategy. I should put it on the website, shouldn't I? Because people get confused with this. It's the same as this when it loads. Yeah, it's exactly the same as this strategy, except it doesn't use an RSI and it runs on the 1 hour chart. That's it. It's very, 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 very simple, which is why it goes into high drawdown, because you are always going to be wrong. Virtually all the time, you will be wrong just by the nature of what it does. You can't have both. I mean, this one is a bit of an anomaly. You can. We got a reversal and out. The next reversal happened there, and we got out. So this is a little bit of an anomaly. But normally what would happen is you wouldn't be out of one of those by the time the next signal came in, so therefore you would go into a hedge situation. Or it would drive, you would get in, and then it would drive down, and it wouldn't give you a signal in the opposite direction, and it just becomes a position trade, normal position trade on the hourly charts. But the reason it also goes into a lot of drawdown is because you are literally just trading hourly reversals. That's it. And there is no extension in the market. So you could get into an hourly reversal alert long at the high, and then it drops dramatically, and RSI gets extended over a period of 3 or 4 days. You could have been right at the top of that. Therefore, you're going to take a lot more heat. And it's an always in strategy, so it's always got something wrong because it's always in. Which is why it banks a crap load of money, but also it will take a lot of heat. So it's high risk, what I call high stress strategy. We're broken, look. Okay, so FTSE's out the lows. The market has woken up. Somebody has walked in and pressed the sell button. So hedged on the DAX. So just going to move target on the DAX up to yesterday's low. I'm going to watch the previous day's low, which is this support area for price action when we get there as well. Might get a bounce out of that. So if I see decent price action there, might try and get out there. But it would require a re-hedge probably, because if you look at where ADR is, which is the potential average daily range of movement today, it's got a hell of a long way to go, isn't it? So getting out here is potentially that much drawdown if you're wrong. So you would need to re-hedge it. Right, let's do some RSIs after I've answered these last 2 questions. Would still be nice to see the failed ones on the chart? No, it wouldn't. I disagree with you, Bill. When I first built the indicator, I had all of the failed ones on the chart. You couldn't see any candlesticks because there will be more failed breaks every day than there will be breaks that hold. This is a signal indicator. It is not to be used on its own. Anybody that uses this on its own with no condition indicator is stupid. I say it on the video. It's a signal indicator. It's built as a signal indicator. It signals. You don't get in because there's a signal. You get in when there's a condition in the market that requires you to pay attention and you want to enter the market. So therefore you use a signal to enter the market when a condition is met. A strategy cannot contain anything less than 2 parts. It has to have a condition, has to have a signal. This is the signal. This is the condition. If you take this without that, it's pointless. So if there is no condition and you just have a signal indicator painting signals on your chart, you can't see anything. So totally disagree. Sorry. That's how I built it originally. And everybody complained. So I did it the other way. Then everybody complained. So I said, screw you. I like it this way. Because everybody complains. It doesn't matter how I do anything. Everybody will have an opinion the other way. That's why trading works, isn't it? If I go short, if you don't decide to go long, I can't get my short on. So we have to have disagreement. But for my systems and strategies that I trade in my way, this is how I like it to work. If you want one that works in a way that paints constantly and leaves artifacts all over your chart, you can get one built. Plenty of coders out there, they'll build it for you, but it's not mine. And it's Friday. It's the wrong day to start picking on me. How many entries do you take? Maximum with the H1 hedging, as many as are needed. And I'm doing drawdown control manually, yeah. Of course, hedged on the DAX to finish the week. I know, it's one of those weeks. I think I seem to remember me saying this last week. Oh, I can't wait for this week to be over. It's exactly the same this week. But what's going to happen this afternoon, Thought Feeder, is all three US indices at the open are going to have nice tight ranges, and we're going to get stupendously strong breaks, and they're just going to go straight down to 2R, and we're going to finish the week in a massive profit. You heard it here first. I hate MT5 arrows. Kills my vision. Cryptic. Let's look at the RSIs, because otherwise I'm never going to get around to them. Aussie, New Zealand, H1, first entry taken. Oh my God, did you see that? Did you see that ADR line move down? It was up there a minute ago, and price moved down, and that moved down because it's measuring the average daily range. Sorry, this person's obviously not coming into the live room this morning. It's really annoyed me even more because I wanted him to come in here so I could pick on him. So yeah, in H1 M5 already, also extended on the 4 hour. So big extension. This is a massive extension on the 4 hour. If you look at typical RSI extensions and where we actually are now, that's massive. Look, that's the biggest extension we've had since December 2022. So that's the biggest extension we've had for over a year. Biggest, strongest move on the Aussie New Zealand at all. Yeah, we haven't been down to this level before. So if you look at all the last extensions that we had there, one there obviously, but one there, the big extensions. Yeah. We're all the way down here. Yeah, so this thing is absolutely stretched to the limit. We've also got this lovely 225 ADR, which is only one ADR away from where we are now, because we're at 125 ADR today already. That is a beautiful potential support area that's going to hold up. Yeah. So we've also got a level miles back, which is all the way down there. But so yeah, really, really, really extended this already. We've got a lovely upside resistance there. And we've got a double bottom upside resistance there for targeting. So that's where I'm targeting at the moment, that one there. But obviously, it could come back up and retest that area. If it's going to be a pullback on that drop, that's what we're looking for. So really extended. If it can get all the way down to there, fine. I'm in one there. I can probably get... I probably won't get two on. I'll probably... three on. I'll probably only get two on somewhere else in here. And then obviously just average into the pullback. So really extended that Aussie New Zealand. That's a massive, massive drop. This New Zealand dollar's on a massive roll at the moment. It's just happened to find a point where the Aussie dollar's been a little bit weak and massive, obviously taking advantage of that move. So very rare that we get extensions. Not very rare, but I mean, it's not often we get extensions on the 80-20. So big move. And again, New Zealand dollar yen, another 4 hour 80-20 level, so that's up at 81. Again, that's wrong pair, New Zealand yen. Huge extension, so I'm in already on the H1 RSI. We're embedded. Look, so again, you don't often get embedded on the RSI like this. It does happen, yeah. So there's two instances here. Can't see it, can you? Let me turn me on. So there's two instances here where we've had embedded, which doesn't happen that often yet, which is what we've got now. So you can see that one, the initial entry would have been somewhere in the region of there, and then we got embedded because we had a continuation rally, and then obviously we had the pullback after that, and then it went into an accumulation. So you would have got in somewhere around there, scaled in and out. Yeah. This one here, you'd have got in somewhere around here on the initial extension, got embedded, And then we obviously would have scaled in a couple, and you'd have got, I mean, you wouldn't, I would have been out here, but you could have held. But obviously the reason we don't hold is because it could do that and that. So you get out. And this is the next instance. We had another embedding here, which was that big spike was a news event, and then obviously the pullback from there. So this is super extended. Yeah. So first entry is there. And obviously we'll be looking for a pullback. You've got a beautiful downside support and a double top there. So there's that propulsion gap there, which is this one. And there wasn't a propulsion gap off of the back of that. It's just ground up, didn't it, for the day? So looking for a pullback into there. Need to put the TP on that as well. So just targeting that propulsion gap to the downside, New Zealand yen. But that's a 4-hour and an hourly. We've got CAD yen extended as well. This is all yen, a lot of this yen. Look at this CAD yen. Oh, and the US yen. ECB April now 50-50. It might change in April. Thanks for that. That's really handy. Could be up, could be down. Just seeing if there's any news just caused this massive yen rally to come in. Don't forget, at any point, if the Japanese get hacked off, they will just go, screw you. They'll just liquidate, and the yen will just go, everything will just go smash. Right, won't it? Will go smash down here somewhere. So that's a very big yen buy that's just come in. A bit of exhaustion there. So we'll see if we can hold that. It's just bloody typical, isn't it? This is what happens when you use stop losses. So yeah, big strong push, New Zealand dollar yen. CAD yen, same story. Hourly RSI extension. First entry taken there yesterday. Targeting somewhere down for that propulsion for the moment. That is a 4-hour RSI extension as well. So again, big strong push. Yeah, just looking for a pullback. Pullback, 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 pullback. Market structure, usual stuff. Euro yen also extended. Again, all these same stuff. Yen, euro yen. Getting very exposed on the yen. Slightly worrying. So first entry taken off the H1 RSI extension, which was yesterday. H4 now extended up to the 75 level. Again, you know, whenever we get over these levels, which you can't see there, but big extension, pullback, big extension, pullback, big extension, pullback. Just normal market movement we're measuring. Pound yen, all yens. Get. I need to do some drawdown. Okay, I'm going to try another aggressive. This. So let's give it some breathing room above the highs. So this is basically limit order triggers off of this level. So I was hoping we were going to get limit triggers here. Yeah. This level here, basically. So we hit this level. We couldn't get through it. We rallied up. Limit orders triggered and sellers took control there. They tried again. Sellers took control. Tried again. Sellers took control. Tried again. Sellers took control. So that was the reason for the aggressive entry here, was I was looking for the sellers to take control there. And my stop loss was above that high. Yeah, in case they couldn't regain control, where they didn't, so they got me out. Now we've got the same situation with the monthly high. So taking an aggressive drawdown control entry there, give it some breathing room. If the sellers don't win this and we break this level, there's a good chance we might get a rally on, which means weakened yen. If that means weakened yen, the US dollar yen is going to rally with the pound yen. If the US dollar yen rallies, it's going to hit that intervention level. The Japanese are going to start moaning about it and do some intervention, in which case it's coming down. So one or the other is going to happen. So going to go in aggressive then. I've already got the aggressive on the US yen, but I'm just re-adding that pound yen one. Yeah. So 4-hour RSI extension. It's an hourly RSI extension. It's an ADR hit from yesterday. It's resistance. There's confluence everywhere. This is what I mean. Signal indicators. When you get a signal, you don't take it because it's a signal. You take it because there's a reason to take the signal. Signals happen all day long. If you're using a moving average cross, you'll have signal after signal after signal after signal. If you took every one, you'd get murdered. If you took every reverse alert you saw, you'd get murdered. But if you take a signal at an area of confluence with a condition indicator, which could be support, resistance, supply, demand, RSI, CCI, MACD, whatever it may be, that signal has more chance of working because the condition that repeats itself over and over again means that you've got a high probability. Why it doesn't keep all of the signals on the chart, because you'd have yesterday, you'd have a reversal alert in there. You'd have a reversal alert there. You'd have a reversal alert there. You'd have a reversal alert there. You'd have another one there. You'd have wouldn't have one there. You'd have one. That's it. Yeah. So what's the point in leaving all this crap on the chart? There's no point. And this is on a trend day. If it was a range day, you'd have 5 times more because it would be signaling, 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 signaling. All you end up with is a load of blocks on your chart. It's pointless. No sense. Nice big rally coming on the yen. Just as it stops me out. Okay, so as you can see, that aggressive drawdown control has brought my average up to within ADR. So if we get a rally today, RSI is going off, I get an exit. Pointless, isn't it? So there's a load more RSI's gone off. Euro yen we've looked at, pound yen we've looked at. New Zealand dollar Swiss is not a yen. Obviously, as we know, that is running like loony at the minute. So H1 RSI extension, we are now way extended beyond the 75. So I'll be getting short on that on the next reversal, which is going to be here. Nice and tight at 150 ADR. So really good extension. I'll be taking that on the ADR account as well. So be getting in on that 5-minute reversal alert when that happens. So yeah, big extension there. 4-hour. We've got divergence again. So RSI is weakening. Price is rallying, which is bearish, which means that there isn't enough to get the market is moving way faster than the amount of sellers in the market, which is why we're getting these big strong candlesticks in, because they're having to reach further to find the sell orders to fill, and that is usually an exhaustion, and then we collapse because there is literally no buyers left in the market. They've put all their money in way too high, and then it drops. Bitcoin on a run. Good for Bitcoin. Bond ETFs break above 1 trillion yen net assets balance on Tokyo Stock Exchange. That's probably what is causing this yen run. 846, 902. Yeah, this is what's causing the yen run. Don't know why that's not in red. But yeah, that's what's causing the run. So we'll see. Again, they're pulling money out of the Swiss franc. Stick it in the yen. New Zealand dollar Swiss, so that's massively extended. We've got loads of alerts going off. What's that? RSIs, ADRs, Euro New Zealand. The New Zealand dollar, they're massively piling into this New Zealand dollar. Look. Loving it. Big strong move. So yeah, that's New Zealand dollar Swiss. New Zealand dollar yen, obviously we know about as well. It's a massive move up. Just goes to show you how strong that New Zealand dollar is. We've got a big, strong yen move coming in at the moment, and the New Zealand is still able to push. So that's New Zealand dollar, a lot stronger than the yen at the moment. But that's a big 4 hour. Again, looking at this one, where we are at the moment, we've only had 2 instances in the last year and a bit where we've got above that level. One of them was there. Big, strong pullback for a week. The other one was there. Half a week of pullback on that one. So 38 retracement on that leg. 50% retracement on that leg. And this is the leg. Depending how you measure it, it's either that leg there or that leg there, depending how you measure it. But if you look for a 38 retracement or a 50% retracement, you're looking easily at getting that high hit on the New Zealand dollar yen. Assuming nothing changes. If this was the reason I keep checking the news is just to check that something hasn't happened. There hasn't been an escalation in a war or something like that. Because typically, if that is the case, you'll see the yen rally dramatically, but you will also see the Swiss franc rally dramatically, and the Swiss franc is weakening, so it's not a safe haven run. Otherwise, you'd have a load of money coming into the Swissy, which it isn't at the moment. So, and the other one we got is US dollar yen, which we know about. So hopefully, we can get a run on this yen, which would be lovely. Only need an ADR of movement on the yen, and I'm out of both of these. It's just waiting. Timing, the one thing we are not able to do. So banking-wise, nothing banked. So taking a loss, obviously, today on H1M5 because I've had to do some aggressive drawdown control on the pound yen. Exactly at the point, it decides to do the opposite, which is always the bloody way. But anyway. You get used to that after a while. ADR reversals, nothing banked today. Nothing banked yesterday either. ADRs are a little bit stuck at the minute. There's nothing particularly worrying yet. US dollar Swiss is getting a little extended off the back of this Swiss franc weakness. But as you can see, it's not. It's a grind more than a rally with the US. And obviously today we came down. I mean, that's the broker candle. But if we come down and retest this level today, we could well be looking at a start of a rollover. So that Canadian dollar unemployment today is going to be very important, because if that is if unemployment goes up in Canada, it's going to weaken the Canadian dollar, and that will drag that US dollar back down with it as well. So we could do with a bit of bad news for CAD. Pound New Zealand 150 ADR. So I'll be getting into a long on the Pound New Zealand at some point as well. But yeah, nothing banked on there. Nothing ready to bank yet. Euro US dollar is the only thing that's getting close, but it can't make its mind up. So again, I need weak Canadian dollar news to get that one up. Hedging banked 3.88% yesterday. 1.14 banked so far today. Nothing else ready to go yet. 16%. I was going to say, how's that banked 16%? That would be nice, wouldn't it? Was that 106 balance, isn't it? 0.76 balance. So this is the new EA that's in testing at the minute. All working well. All good. This is trading a ridiculous strategy, so ignore all of this. It's just testing functionality. It's using 65-35 RSI extensions and stupid 70% ADR levels and stuff like that. So it's just basically just wanting to get in the market so that it can trade. I just want to check quickly. ADR, pound US. So that was a long yesterday. ADR 917. 70% of that. This is interesting. Well, you might not find this interesting. I find it interesting. So the EA took a trade here. Okay. And the signal for this is literally just across of the 9 moving average. That's on the 20 at the minute, which is there. But I discovered a really interesting thing about the moving average. The way that MetaTrader, I don't know if this is true of all platforms, but the way that MetaTrader interprets price being above and below a moving average. Because I got a trade exactly like this, actually. So I had a trade which took a short and it exited the short there, right? For example, the next candle, which is this one here, this big long one, opened below the moving average and closed below the moving average. Okay. And the logic that I've used is price must open above and close below, or open below and close above to trigger an entry. And it took a trade short. And I was like, hang on a minute, that opened below the moving average. That's not right. But it is right, because at that particular point in time, this moving average line, when this candle opened, was here. So the open is actually above the price reading for the moving average. But the way it draws the moving average, obviously, it only updates each candle. So you'll find with this that actually that's right, because it did open above the moving average, because at the point of that candle opening, the moving average was there. And I was trying to figure out, hang on a minute, that's what I would class as above the moving average and below the moving average. Yeah. But that's below the moving average as far as I'm concerned, because it's here and here. But the actual price quoted at the open, because what it does is it moves that line down when that opens. Interesting fact. So I'm getting ready for that explanation, because there will be a load of people when this comes out going, it took a trade, but it opened above and it closed above. It shouldn't do that. It's a quirk in the way that it works on candle close, because it doesn't draw this bit until after. So you have to look at that candle, the reading of the candle after that, which is something new I found out after using this platform for 15 years. I'd never even noticed, but I'd never looked at it because I've never built anything that works off of that signal. So anyway, there you go. Interesting fact of the day. New Zealand dollar, US dollar has also hit. This New Zealand dollar is off the charts at the minute. Absolute lunatic. Oh my God, look how quick that's come back. Straight into ADR. Collapse. So another hit there, New Zealand dollar, US dollar. Indices. Can't do anything. Can't do anything with it. It's not moving. So short FTSE. It's rejected yesterday's low. But then they're not interested in buying it either. So we're just sitting inside the initial cash balance opening range. So I am short, and if it breaks down, I will get out. If it doesn't, I will get hedged. If it doesn't move anywhere, there's nothing I can do. I'm just going to have to lock both hedges in. So targets downside yesterday's low. I will be watching pre-low, the low of Wednesday, which is here. I'll be watching that. Upside target, yesterday's high. I mean, by the New York Open, I'd be surprised if we get there. So I'm going to move my target down to yesterday's high, which is the propulsion move that we retested. That is still 3R. So 3R to the upside. It's about 4R to the downside. That's not got anywhere. But if that does get hedged, I'd probably just leave it where it is at 5R. I'm sorry, that's not 5R, that's 5R, that's 2R, isn't it? Yeah, I mean, if it does get hedged, I'll pull the targets down to yesterday's high, because that's just shy of ADR today. So if we do get hedged on this one, if I get hedged on this one, I'm just going to move my target down inside yesterday's high. Downside target is, I mean, this whole grind here, very hard to pick a level on it, isn't it? So downside target 5R is 125 ADR. So these highs here today, so we hit that level, broke it, retested it. So that is a support resistance confirmed. That's within ADR. So I'd push targets to there, or rather push targets up to there, inside ADR, and see if we can get a bounce off of that point there. But it's not going anywhere. I feel exhausted, don't you? January, it's just been exhausting. February, so far, exhausting. I just feel exhausted at the moment. I've never felt like this trading. It's just draining. Forex is draining. Indices are draining. It's all draining at the moment. Anyway, right, let me catch up on the chat. Any reason why you designed your propulsion gap indicator to indicate blue the entire region, even though a portion of the gap is tested? No reason, just did. I usually use reading glasses, but with MT and its tiny font size, I need to. It's very bad for the eyes. Yeah, depends how old you are. I always just sit close to the screen. At some point in the future, you'll see me streaming like this. Candlestick's gone up. Or I'll have massive goggles on. My eyesight's terrible. I've got to go and get my eyes tested again. It's getting worse. I don't trade Aussie New Zealand for months, as well as Euro Swiss and US dollar CAD. Two large squeezes. You say that, and then pound US dollar will go into a squeeze, and you'll go, I'm not trading that anymore. Then the US dollar yen will go into a squeeze, and you go, I'm not trading that anymore. Before you know it, you've only got 3 pairs left out of 28, because they will all squeeze at some point. It's all down to fundamentals and market conditions. They change all the time. The squeeze changes all the time. You can't pick one. You don't trade because of a squeeze. Otherwise, you'll never have anything left. 65 likes, 89 people. I'll take it. Do you think stop loss and risk reward are concepts invented by retail traders? I mean, if the big boys don't use them, where did they come from? Don't know. There's nothing wrong with it as a concept. It works. The problem with risk reward is that people do not use it correctly. So look at the stock index hedge concept. The reason we use risk reward on this is because we are always having an achievable reward based on our risk. Yeah, which is why we use a minimum and maximum range. So the minimum range is 10% of the average daily range. The maximum range is 20% of the average daily range. If we use a maximum of 20% of the average daily range to achieve a 2R move, we'll never be beyond average daily range. We spend 58% of the time within the average daily range, meaning that the target is achievable every day. If you set a range of 50% of the average daily range, and you are happy to take a trade of that, to get a 2R return, you would need the market to move 150% of its normal range to achieve your target. It's never going to do it. It will do it every now and again. If you look at ADR, it'll do it roughly 12% of the time. So why would you possibly use a risk-reward ratio that would give you a result 12% of the time? Pointless. Yeah. So people use risk-reward in the wrong way. The logic is sound in the fact that if you were to risk that distance and target that distance, you will have a long-term edge, a profitable edge. The problem is risk-reward uses a stop loss. So what happens? You get stopped out. So you go, fine, that one didn't work out. So then you take the next one. But what do you need now on the next trade to make a profit? More reward, because you've got to get that loss back. So the next trade has to be that, not that. And you get stopped out. So you go, crap, that didn't work. So I take another one. Now I need to target that because I've got to get this one back. That one stops out. Now I need 5R just to break even. Yeah. And this is only having 4 losing trades in a row. Yeah. You can have 10, 15 losing trades in a row. All strategies will have a failure point. If you've got a trend breakout strategy and you're going to a range for 2 weeks, you're going to have way more than 4 stop outs. You're going to be stopped out every day. So by the time you get to the end of that 2-week run and you've taken 15 stop outs, you need a 15R. Can't write today. You need a 15R just to break even. Just to break even. So I know, let's use a 1R because we'd only need a 50% strike rate for that. Brilliant. So what do you normally get? 50, 60, 70%? Excellent. What happens when you lose 10 trades in a row because the market just didn't work out? So you're now negative 10R. How the hell are you going to get back that? You need 10 winning trades in a row. Not going to happen. It will, but you won't be around because by the time you've had 10 losing trades in a row, you'll have screwed that strategy up, thrown it in the bin and moved on to the next one, hoping that one works. Because that one only uses a 1.25R. Even better. Don't work. I don't know who invented it, but it certainly wasn't a bank because the banks don't do it. Yeah. I suspect it was probably brokers. I mean, I don't know how far you'd have to go back to find the first trading course, but I suspect it's going to be brokers because brokers want you to press the button. Every time you press the buy and the sell button on a chart, yeah, when you hit that and that, they earn a commission, a spread, and if you hold it overnight, a swap. So what is it in the broker's interest for you to do? Stop out often. Because when you stop out, you go, that didn't work out. I'm going to try again. And you hit the button again. Spread, commission, hold it overnight, swap. So the more you press the button, the more the broker earns. Let's put a course out there that teaches them 1 minute scalping with tiny, tight stops, which has a high risk reward ratio, which means they'll very rarely hit that target and more often they'll get stopped out on just normal market movement. What are they going to do all the time? Just keep pressing the button. I don't know. That if I was a broker, that's what I'd be teaching you. I'd be teaching you any time frame above 1 minute is utterly useless. You need to be trading the algorithmic movement. And this is how you read the algorithmic movement. When you see a bear candle going, it means the sellers are in control. Sell it. Put a stop above that high. Oh, you got stopped out. Never mind. At one point, you will catch a 15R run. You just got to hold on for that 15R run and hope that you don't blow your account by the time you get, oh, you blew your account, did you? Next. Right. This is how you do it. When there's a candlestick that comes in, rinse and repeat. 90% of brokers lose 90% of retail traders lose 90% of their account in 90 days. The brokers have just literally have to replace those people every 90 days. Stop loss. I don't know. Conspiracy theorists, off you go, run with it. I have no idea, but it doesn't make sense, does it? You mentioned about AA plus signals with the 85 RSI once or twice a year. Can you build a feature into the market reverse alerts EA which plays the Jurassic Park theme or something epic when that triggers somewhere? No, but what you could do, Thought Feeder, is just set the market reverse alerts EA up to take 85 level RSI extensions on the 4-hour time frame. And it will sit there and do bugger all year, and suddenly it will take a trade. Ta-da! Do it. Just go and do it. Scroll out as far as you possibly can, right? Stick a line on the chart at 85. You would have had one entry only on the pound yen since October last year. One with 100% strike rate. So just go and stick the market reverse alerts EA on the chart and get it to do that. You'd have had two entries on longs. One there and one there. So far, you've only had 3 trades since October. So 24th of October, November, December, January. 3.5 months, 3 entries, 100% strike rate. I have just invented the Holy Grail. But just don't expect to get paid regularly. You've got 28 pairs, to be fair. So this is only one pair, isn't it? But yeah. This is the sort of... I'm going to do... I'm going to put together a compounding account, I've decided, because we talked at length about compounding yesterday and how ridiculous it is. But I thought I'm going to put together a compounding account, and I need a strategy that is super, 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 super reliable. So I'm going to use triple top bounces, and this was the other one I was going to use, but it's going to be one of those things that you might take 1 or 2 trades a month, but when you get into these trades, you get in with 10% risk, right? You get into the trade, and the rule is you do not look at that trade or that chart for 2 days, because you will see it go into profit, out of profit, into profit, out of profit. Or maybe we'll have a rule where we only look at it once a day, maybe in the morning or at night before we go to bed, but we only look at it once a day. Because when you get in with a 10% risk and you see that thing move up into 5% profit, the first thing you want to do is close it. Christ, that worked. Brilliant. I've just made 5%. You're missing the opportunity for 30 to 50% return. This is 100% strike rate. Look at the moves you got out of it. Yeah. This is the compounding strategy. But this is something that is going to take you 6 months to a year to do, because you're not going to get many signals on it. But it's amazing. But you can't trade with it every day. It's the sort of long-term strategy. It's the Warren Buffett. Yeah, Warren Buffett sits there doing absolutely nothing with the S&P for weeks and weeks, and then all of a sudden it'll get to an oversold level, because he only buys it. Oversold level of X, and he'll go, yep, 20 million. No, okay, another 20 million. No, okay, another 20 million. Get out with 220. That's what Warren Buffett does. He's an investor. He waits and he plays the swings, and they're long term. The S&P is an instrument that just increases in price exponentially. It will never stop increasing in price because stocks will never stop going up. So it's the same sort of thing, isn't it? We wait for the A++ setup. Yeah, they work. But your job is to wait for the A++ set. Look at what's happening now. Why? What did I just explain about earlier when we were looking at all these pairs that had been embedded? If you get embedded, the market can't sustain it. The reason it's getting embedded is because the buyers literally cannot get through that iceberg brick wall that the sellers are sitting on. You can't do it because you've used all your capital. Yeah, there is a limited amount of M2 money supply in the world for each currency. The banks have used a lot of it. They haven't got much left. They got bucket loads, but it's not financially viable to push it further. It's too risky. Don't forget, banks have got a risk They've got risk managers. They've got all sorts of people looking at everything that goes on in the bank and institution. If you are so over leveraged that you've got 150 million in profit sitting on a long position and you say, I want to add more to it, they'll go, are you nuts? Do you not want the Ferrari commission? Or would you rather wait for the Ferrari commission to go? Get out the thing. Take it. That's why we get market structure. But these are the big squeezes. These are Barclays getting in long at the same time as HSBC getting long, at the same time as Citibank getting long. And they all look at each other and go, shit, look at what we just did, guys. Get out. All at the same time. This is why you get I keep talking about I haven't talked about it for a while, actually. Climbing up the elevator shaft. And then we fall, climbing up the stairs and falling down the elevator shaft. Why do we get these big sudden collapses in the market? Profit take. Let's build a long position. He's getting out. I'm getting out. I'm getting out. Everyone get out. Yeah, but we don't get out as we're going up. We build. And then we get out fast, all of us together. We get out on that. That's what our job is. We're waiting for them to have climbed. We're getting out on the shaft. There's a load of cushions at the bottom and mattresses, so it's okay to jump, just in case you're worried. Like that. It's an hour and a half. Would be interesting to analyze how many market openings over the year are strong breaks. Already done it. 33%. Roughly. It was slightly different on each instrument. I've already run the numbers. Got the data. Did the back tests. Exported it. Is this the right spreadsheet? Is that the right spreadsheet? Clean breaks, 32.87%. Yeah. That's on average. That's the DAX, but the others are all around the same. Yeah. But, 33% of them, yeah, this could all happen in a period of 3 months. And then we have 6 to 9 months of stagnation. Yeah, it's not an even number happening at a specific time. It's this, you just have to sit through it. The edge is that we get 30% of those clean breaks just fly. And we just get target after target after target. Money rolls in. You can't get enough of it. And then we get stagnation periods where you literally pull your teeth out. You can't do anything. Pull your hair out. Don't pull your teeth out. Pull your hair out. Don't pull your hair out either. You just get frustrated. You know what I mean? We can't time it. We don't know when they're happening. Did you enter New Zealand Swiss? Not yet. We haven't had a reversal yet. 175 ADR. Reversal is coming. How will the new EA dynamically change the moving average when the time frame is changed? It doesn't. You don't change the time frame. It runs on a VPS like all other EAs. Yeah. So you set it on M5 if you're trading M5. You set it on M15 if you're trading M15. We will need a 2024 office tour. No different to previous 2023 office tour. Nothing's changed. Literally, nothing has changed in my office apart from there's a load of crap suddenly appeared down here, which is stuff I need to sell on eBay that I can't be asked to do. So nothing's changed. There are no new posters anywhere. John Wick's still over there with the US Enterprise. Do you reckon you'll be streaming at 60? I don't know. The way that my pension fund is going, yes. We had a news article on the other day what you need now to have in your pension to live comfortably. You need £500,000 in your pension. I was crap at pensions when I was young, and I didn't start my pension until about 15 years ago, which is partly why I ran a pension account to trade the S&P, which at the moment is turned off because I'm not convinced the S&P is actually going back bull yet. But we worked out the other day, I'm many hundreds of thousands short of where I should be for a comfortable life. So, inheritances. ANZ forecasts the Reserve Bank of New Zealand to raise the cash rate to 6% by April. Where did you hear that? That hasn't come through on Financial Juice yet. Oh, there. Okay. Where was that then? That's a bit bad. Surely, if it's that important, we should have had that in red. ANZ now sees Royal Bank of New Zealand raising cash rate in February and April 6%. Okay, that is. That doesn't really make sense. Admittedly, yeah. I mean, their inflation is still stickily high at a very, very high interest rate. But it is on the bounce now. We have dropped by 0.9% last quarter. So it is coming down as fast as the Aussie, who is sitting at 4.35. So obviously they've done a better job. Their unemployment is going up, though. So if they increase that, that is going to skyrocket. Their GDP is coming down. That is going to plummet. So putting that up would have serious consequences on their gross domestic product and their unemployment rate. Yes, it would stop people spending money because they'd all become unemployed. So inflation would get squeezed further, but it's coming down at a decent rate. I'd be very surprised if they stuck that up, but maybe they will. It's a difficult time because we've not been in a situation like this before, coming out the back of a pandemic into this type of economy where we've had wars breaking out, oil prices going through the roof, and everybody getting stung. So, I don't know. Oh, that's obviously what the New Zealand dollar is reacting to at the moment. Then, so that makes sense. I'm a bit disappointed Financial Juice haven't put that in red somewhere because that is why we read this every morning. They hid that away in there. That should have been announced. So that's what this New Zealand dollar rally is all about. We may well get the Royal Bank of New Zealand coming out and saying something about that at some point. When's the next inflation expectations? Or is not forecast to speak until next Thursday? We'll see. So yeah, if that is the case, if they do increase those interest rates, that New Zealand's going to go. So be a little careful with those. But quite surprised we haven't had any information out of that. So just keep your exposure limited a little bit on New Zealand, I would, and get out quick. My conspiracy is that if you show people how to actually trade in schools and unis, the 80+% of workers who hate their jobs will quit and trade instead. What impact would that have on the GDP? I have no idea. What you're missing, though, is the fact that you can teach a horse to drink, but you can't teach it to go to water, or the other way around. It's the other way around, isn't it? You can teach you can lead a horse to water, but you can't make it drink. Yeah. Don't forget, in schools and universities, we teach people lots of things. Yeah, and then they still go and fail exams. Yeah, go and read as many books as you like about trading, and then go and try and trade. There's a skill set involved in this that isn't teachable. So I don't think that would actually work. And don't forget, we have still got no control over this thing. So my last mentor was a fund manager, and anytime I mentioned a stop loss, the answer was stops are for buses. I like him, Alan. Who was that? Finally, somebody else that's on my wavelength. Stops are for buses. I'm going to use that. That's brilliant. I like it. Stop loss. Best compounding strategy is H1 hedging. No, because it's massively high risk, AZ. The best compounding strategy is high strike rate. High risk, high strike rate. This is low strike rate. Finger in the air, wind change direction. Okay, we'll do the same. It will build profit quickly, but it builds drawdown quickly. Yeah, that's not what we're looking for. What if that gets to 50% and that is sitting at 25%? You are in 20, and you close all that out, you lose 25% of your account. A compounding, you should always use a stop loss with compounding, but you should always take super, super, super high probability trades, or just accept the fact that you can't do that and you are going to have a lucky streak. Think prop. That's what prop is, basically. Prop is asking you to compound. They give you 100 grand account and say you've got 5% of drawdown. So what have you got? 5 grand. What do they ask you to bring back? 8%. So they give you 5 grand and they want you to bring back 12. They want you to double the account. What are they asking you to do? Compound by 100%. Yeah, that's what prop is. People think they're trading 100 grand. You're not. You're trading 5. You're trading the drawdown because that's all you got. You've got 10 grand total, 5 grand a day. Every day you enter the market, you've got to turn that 5 grand into 12. You need to bring back 8%. Smokes, mirrors. It's just, that's how it is. And to do that, you've got to be either really lucky or have a really good, strong strategy that very rarely enters the market. Look at the 5-minute RSI. Yeah, we'll just go over a week because that's all we can fit on the screen. Let's find 85, somewhere around there. And 15. Yeah. So you've had one entry on the 5-minute chart there. It failed. You haven't had any longs. Yeah. So we went from a 100% strike rate on the 4-hour chart, or the hourly. It was the hourly we were looking at, wasn't it? To a 0% strike rate on the 5-minute time frame. Prop want you to pass within a certain period of time. They've removed that bit now, haven't they? But it was, you've got to pass in 30 days. What's that make you do? Trade low time frames. What happens on low time frames? Total algorithmic chop, nonsensical movement. What happens on higher time frames? Market structure, rhythm. Yeah, everything is geared to stop you making money. Same with compounding. Forget 5-minute time frame. Not even interested. It's just not an option. You need to trade time frames that are going to provide super high probability setups, and you jump in with both feet. Massive. 10%. Get in with a 10% risk. think about this New Zealand move at the moment where we are right now. Yeah, this could well be a fundamental move. But if we got in here with a quarter of an ADR stop loss with 10% of our account, and we move down a quarter of an ADR, we've made 10%. If we move down half an ADR, we've made 20%. If this was to collapse by 1 ADR on a news event, we've made 40% increase on our account. We only need 3 trades to double it. But do you want this trade to work? Damn right. You need to be using A++++ setups. Hedging, we had a reversal. Let's go long. That's not A++. That's using a different money extraction method, which is basically continuous banking and luck. Everything's luck in this market. And you don't know which way anything's going. So it's all luck, isn't it? But there are ways to obviously increase that luck. Yeah. Why am I taking an aggressive drawdown control position on the pound yen? Just explained it. Because the probabilities are very, very high of a reversal. Still no idea. But if this works, I'm out this afternoon. If it doesn't work, I've got another 0.5% loss on the account. If I'd have got in here with 10%, I mean, if I got in there with 10%, I'm already somewhere in the region of 10% in profit. It's just compounding's got to be done on a high probability strategy. The highest. I'm late to class. Have we done New Zealand yen? Yes, we have. It's extended on RSI 150. It's extended on RSI on the hourly. It's extended on RSI on the 4 hourly. It's extended above ADR. It's fundamentally moving because of the news that they may be increasing interest rates, which for some reason Financial Juice completely missed. But anyway, it is hidden in there. I mean, it is only ANZ that have said that, so it hasn't come out the horse's mouth, so to speak, has it? You got many years from 60. Yeah, I've got a long way to go to 60. New Zealand dollar could be bluffing. It could. There's a 50-50 chance. If you already answered this, just say, I'll watch the replay. How will the new EA dynamically change the MA when the time frame is changed? I just answered that, Steve. You asked, didn't you not ask it earlier? Yeah, you just asked it. I answered it. Now you've asked it again. I hadn't got to the question yet, probably. There's a delay. That was an echo. It wasn't even a delay. That was a delay. Maybe the A++ 85 RSI would be good for prop. Yep. Providing there are no minimum number of weekly trades needed and there's no time limit. Yes. Definitely. I just answered it though, Steve. Literally. But it doesn't. It trades the time frame. So if you this moving average here on the 5 minute, you're trading 5 minute. If you go there, you're trading hourly. If you go there, you're trading 4 hourly. But this goes on a VPS. Yeah. This EA is running on a VPS. It is currently in manual button trading mode only. Disables auto trading. So none of the auto trading is working. The auto trading is turned on the VPS. On my terminal that I'm using to monitor everything, it's in button mode only, which means anything I do here will not affect the functionality of the EA running on the VPS. However, it does give me the ability, if I fancy it, is that a buy, to press buttons and add positions in if it ticks. Why are you not ticky? Does that suddenly stop moving? No. Okay. It wasn't ticking. So yeah, this is the idea of this. I can manually enter stuff and then the EA just takes over and does all the other stuff. Whereas the next long position going, all that sort of stuff is all done for me. So you wouldn't use the EA on something like this where you're live with auto trading turned on. Yeah. You had to stick the kettle on alert. Yeah. Fine. But yeah, it won't change. So I'm going to recommend, obviously, if you're using in the settings, you've got 2 strategies to trade. So I'm going to recommend, as normal, if you're trading ADR reversals, you use the 5-minute time frame. If you're trading RSI reversal strategy, whatever RSI you're using, if it's the hourly, use M5. If you're trading the 4 hourly, probably still just use M5, or you want to use M15, one or the other. If you're using the daily RSI extensions, you probably want to use hourlies. If you're using weeklies, use 4 hourlies. Yeah. But 99% of the time, this thing is going to be sitting on the 5-minute chart on the VPS. Don't touch. But on here, it gives you the ability to go, like I do in the live room, like that pound yen. I'm sitting in the pound yen. I'm going, this looks like a great opportunity for a short. The EA is not going to get me in because I'm too close to that position. I can do it. And the EA will then go, oh, he's just taking another trade. Let's recalculate entries and do everything. And we'll use that trade he's just taken to go into our total profit target to get out of the position. So it does everything. This is everything I want position trading EA to do. Market reversal at EA does too much. In a way too complicated manner. It's the psychology of looking at H1M5 having done 1%, whereas hedging is on 20%, sitting in not much more drawdown. Yeah, at the moment. But that's at the moment, AZ. Come back next month when market reversal, when H1M5 strategy has banked 15%. I'm sitting in 2% of drawdown. The hedging strategy has done a load of drawdown control because it's all going wrong. It's sitting in 25% of drawdown and only having banked 5%. Yeah, you can't base anything on, literally, we are the 9th of February. This is not a representation of this strategy's success. This is 9 days worth of trading. Yeah, come back in 3 months and see how it's done. Last year, it did 145% in 9 months. Last year, H1M5 doubled. Yeah, this went into 3 times more drawdown than H1M5. Just because they're both roughly the same right now doesn't mean next week they're going to be the same. Next week, this could be 25 and H1M5 could be 2. Hedging is not for the faint-hearted. Squeaky bum time, 24.5. Yeah, good way to lose weight though. Yeah, it is very squeaky bum time. I'm watching. I mean, this is the thing. I'm watching this going up, and I know in my mind this is totally normal. Remember, every time we looked at the VPS last year, we looked at this account, and it was. I think one time I saw it down about 5 or 6, but 90% of the time, this thing is sitting in 15 to 25% of drawdown. All the time. That's where it lives. It's home. My home position trading H1M5 is 5 to 15. This one's home is 15 to 25, 30. That's where it lives all the time. For me, that's just a little bit too much. But like I said, I can't ignore the fact that the thing did 140% return. So that's why I'm sticking some cash in. I'll regret it or I won't. We'll find out. DAX looking like it wants to break long. There's a FTSE. It's going to get hedged, isn't it? It's a nightmare. It's just a nightmare, this thing at the minute. DAX isn't looking like it's going to go long. It's looking... I mean, that's the middle of the initial cash balance candle today. It's just not there, is it? It's just nothing. Maybe we're waiting for the CAD announcement. I don't know why, but maybe we are. Can't do anything. It doesn't make a difference if you jump around the time frames. I run H1M5 on the VPS and do all my analysis on the VPS. If you use the market reversal alerts EA on the VPS and you keep switching time frames, it will go very wrong very quickly. Once you set the VPS up with the chart, you don't touch it. With this new one, you can do what the hell you like. It won't make any difference. Well, it will make a difference if you've got it run in auto mode. Don't do it. I mean, the VPS, a VPS is there. You never touch it. You set it up. It takes your trades, does the analysis. You never touch it. All analysis of your own trades of your own is done on your own terminal on your own machine. That VPS, ideally, you should just go in, turn it on, never log into it again. So there you go. Trading is so effing stressful. Yeah. Grey. 40. I was grey. Been trading since I was 34. Never went grey before. Started trading 6 years later. Grey. Morning, Yusuf. It's like summer trading. It is. It's hedged on the FTSE, hedged on both. Right. Oh, it's just depressing at the minute. So depressing. So just pulling upside target down inside yesterday's high on the FTSE. Downside target. Why can't I get those to line up? Just inside ADR, so above those highs. So these highs here, which turned into support, which was the previous support, which turned into resistance. So that level inside ADR, or bounce off yesterday's high just inside ADR. I suspect that's what we'll get because we're not getting anything else. So unless something changes and something moves the market and the FTSE actually decides to do anything. I mean, it is putting in a nice 3-bar reversal, but a 3-bar reversal typically is after that is a 3-bar reversal. Typically it's after a run. This isn't a run, is it? This is not anything, is it? It's just nothing. Just depression. You can see why people give up trading. I'm used to this because this is what it does. But if you're new to trading, you look at this and you think, there is nothing I can do to make this work. There is nothing I can do to predict this. There's nothing I can do to get any edge in whatever shape or form, because everybody looks at it and they want to make money now. And you have to realize it's not now. It's when the market decides it wants to pay you. Today, the market doesn't want to pay us. We can't force it to pay us. You just have to sit through it. The days it goes 5R, 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 3 days in a row, we don't sit around going, don't like this. We sit around going, this is easy. Nothing you can do. One thing he said, one thing he did say different to you is the higher time frame should be divided by 4 for the lower time frame. H1 to H4, H4 to H1, H4 to M15. Yeah. I mean, multi-time frame analysis is discretionary. I'm trading at the moment, or I was trading before, H4M5, not H4M15. But the problem I find with dividing by 4 is, if you look at the price action here on this 4-hour candle, yeah, and then look at the price action on the hourly, there's no difference. But if you look at the price action on the 15-minute time frame, you have structure within the move. Yeah. So for me to get a proper multi-time frame entry, what you're using is the higher time frame, and then you're using the lower time frame for entry within the higher time frame move. That's the whole point of it. So you, on an hourly chart, if a candle pushes up and you go, that's extended on RSI, I want to get into a trade. If you drop down to the 15-minute time frame, you will find 4 15-minute candles like that. How do you get in on the 15-minute time frame? Because what will happen is if you get 4 like that, you're just going to get a bearish engulfing on the hourly. It's the same thing. Whereas on a 5-minute time frame, you might get that, a definite reversal structure. That's why I use lower time frames. If you divide it by a higher number, you're going to get more fractal entry. Yeah. So look at that on the hourly. Yeah, nothing but bull. Look at that on the 5-minute. There's a definitive bear price action going on at the moment. Look at it on the 15. Bull. 5 shows you the lower time frame, shows you more of the reversal starting to kick in. But I mean, it's each to their own. The fact that he's using higher time frame, lower time frame analysis is good. So it should be done. But doesn't make much difference, to be honest. But it doesn't go wrong even if I leave every chart on H1, it still takes 5-minute entries. Not my product, it won't. No. The market reversal alert CA will not take a 5-minute reversal alert on an hourly time frame. It's physically impossible. It can't see them. You can't use the market reversal alert. The market reversal alert CA uses the reversal instructor on the time frame. It's monitoring this orange block for price to break below it. On the 5-minute time frame, the block is here. On the 1-hour time frame, the block is here. If you are looking at the 1-hour time frame on the market reverse alerts EA, it can't see that. It's physically impossible for it to take that trade. Can't do it. Can't. The logic doesn't work that way. This is why you have to have it on the time frame for the reverse alert. If you figured out a way to do it, certainly not my product. I don't know what it is. He said higher than 4 is too far away to be relevant. The higher time frames. Yeah. It sounds like this guy's done my class. I think the higher time frame. Alan, it doesn't. You're wrong. Sorry. I built the product. I know the logic. It monitors, the logic is current time frame. It goes, what is the current time frame? What is the last down candle on the current time frame? If you're on the 1-hour chart, there is no current time frame on M5. Have you ever tried? Of course I have. Put it in the back tester. Put it on the hourly chart and try and take a 5-minute reverse alert. It can't do it. There isn't one. I'm not going to argue with you about it, but it's like saying the inventor of BMW invented a Mercedes. He knows he didn't invent it. I built it. Anyway. He said 4 hours too far away to be relevant higher time frame. Yeah. I think the time frames you trade are dictated by when you can trade. This is why in my bootcamp I give multiple references to multi-time frame analysis with daily, 4-hourly, hourly. Because if you are working all day, you can't trade hourly because you can't look at the charts. 4-hour, there's 12 candles in a day. You're going to miss half of it, but you're going to sleep for half of it anyway. Daily, you can very easily with a full-time job. So, but obviously daily movement is a lot slower. That's more of an investment time frame. So if you're looking to make regular intraday money, daily is hard. So I mean, 4-hour really is as high as, I mean, I never look at anything over 4-hour. I mean, I very rarely go on a daily chart. You'll never see me go on a daily chart. I'll go on a 4-hour, but that's where the money's made. Hourly movements. I'm using H1M5 with targeting half an ADR and fake stop loss half an ADR with 0.1% trade, and it's banged 5% in January. But it's just open and close faster, just managing ones with 0.5 DD or higher. Now you're in 2.3% of drawdown. Yeah. Depends when you got in, didn't it? Yeah. I mean, if I hadn't got into the yen pairs in January, February would be looking very rosy at the moment. But I did get into the yen pairs in January. I couldn't avoid it. Right, I'm going to leave it there. I'll be back this afternoon for New York. We'll see how things start to play out. Oh, crikey, I'm going to have to move my P&L down. Not that far. So yeah, nothing banked so far today apart from the loss on the aggressive drawdown control. Pound yen aggressive is working quite nicely. US dollar yen is still, by the looks of things, holding at the minute. Yeah. So that's holding at the moment, US dollar yen. So we've just got complete indecision so far today. We've rallied up. Sellers have battered back down, tried to push, failed. So I'm not surprised because we're probably sitting waiting for the Canadian dollar. However, that yen strength seems to have waned a little. So we'll see if we get a continuation. So this just shows that the US dollar is rallying as well as the yen, because everything is still slightly coming down against the yen, but the US dollar yen is frozen, which means it's got the same strength as the yen at the moment. So we'll see where we go. But hopefully we get that continuation on the yen strength. But that New Zealand dollar flying. So we're at 125 ADR. So it should be short New Zealand yen now. Yeah, New Zealand Swiss in short off the 175. Let me just put some targets on these. I'm just going to target that propulsion move down there. Could well get down further, but I'm not going to be too aggressive with these New Zealands. New Zealand CAD first entry. Pushing it. I'm going to use the support rectangle on the MRA for this one, which is also here. New Zealand. Again, not going to get aggressive on this. Just going to target the accumulation, break, retest in case that New Zealand dollar continues to rally. Pound yen I got into today. Oh, that was yesterday. I still haven't targeted it. So look at propulsion. ADR move to the downside. Euro US I know about. Euro yen and Euro Swiss in. Yen, propulsion, Euro Swiss. Go for an ADR. Swiss yen. Propulsion. CAD yen. God, there's a lot of new entries today, isn't there? Go for that high. So that's that propulsion move, which was retested. Which yesterday already targeted. So yeah, nothing to bank so far today. Need to move that one down as well. Gonna have to move all this text over. A lot of positions on. Yeah, we'll see how everything goes today, but nothing to bank at the moment. Need that yen rally, basically, don't I? Need some strength in the yen. Champagne, good morning. A little late to the session, just a little bit. You have different settings on your EAs on your computer as you do on the VPS. Nope. How does it not mirror the settings of the EA but mirrors VP levels? I don't know what you mean, AZ. Am I interested in pound US dollar today? I don't know. Your name is Gold Wealth Life. So why were you interested in the pound US dollar? Because you trade gold. I don't know. Am I interested in it? No. Not at the moment. Not going anywhere. It's not gone anywhere. If it's not gone anywhere, I don't know which way it's going. I'll wait for it to go somewhere and then I'll get in. Right, I'll leave it there. Anything you need, let me know. I'll be in Telegram. I'll be back this afternoon, 2:20 for the New York session. Targets all set for the hedges on DAX and FTSE, which is now back inside. Both of them are back inside the middle of the range. So, yeah, nothing's going anywhere. So we'll, apart from New Zealand dollar and the yen. So back this afternoon, we'll have a look at it. Make sure you're aware of the news at 1:30. Canadian unemployment rate. So that's got potential to kick the Canadian dollar and obviously the US dollar today. So we may get some decent movement off the back of that. We are forecasting unemployment to go up, which is going to be negative Canadian dollar. So, and obviously potentially negative US dollar. So if we get a 5.8, you might find a rally in the CAD and the US. If we get a 6, we'll find possibly a big drop in the CAD and the US. If we get an as expected, could do anything it likes. So we'll see what happens with that one. If it goes any much more than a 6, we'll find a potentially strong negative move. So we'll see what happens today, but could be a big one today. We'll have to wait and see. All right. Anything you need, let me know. I'll be in Telegram. Other than that, I'll see you in the next session. Have a good one.